Hello, it's Dave Knight here of 123daytrade.com. Thanks for watching. Thanks for being here. I want to do something a little bit different. What I want to do is take my best trading strategy called the CLPIT strategy, and I want to put it in its own like little separate little container box, and I want to offer it up this way. And I'm putting it together. Yeah, but anyway, so you're looking at the crude oil market in front of you, and why do I call it CL? CLPIT strategy stands for Crude Oil Power Inventory Strategies, the official big name that I've called it. But it ends up being my best trading strategy that I have year in, year out, month in, month out, week in, week out. So if you have something and you think you got something good, should you get paid for it? That's the question that I've been asked prior, and I would say yes. I am the creator of this content. I know what I'm doing and how I want to approach it. Therefore, yeah, I should get paid for it. So that's neither here or there. But anyway, so you're looking at the crude oil market, and I want to show you what the entry was that I was able to get into and catch it. You notice right here is where I was able to catch this market, and then I was able to run it down. I tried before that. The inventory itself came out at 10 a.m. When you look at the trade itself from the original trade opportunity that came about, we had an entry here, and then we had an entry right at this area. The market ends up going down almost 2p on the trading session, which would have put it at 50. I think 2p today was 50.24, if I remember correctly, and it went to 50.26, and then it just, this was 1, 2, yeah, it went down to not quite 3, excuse me. 3p would have been 50.24. So the market ends up heading down. There's a lot of things I'm throwing out here. Low volatility. I was into and ended up getting the first trade. I think I lost right off the bat because this is what the market looked like when it first came out. Here's your inventory number that comes out. 2345 is the volume bar that comes out, and then 1 minute later puts it right in here. And this was the trade that I took on, and then it ends up taking the 12 tick stop. So trade number 1 in the strategy doesn't work. Then I saw this right here. The market was going up. It comes off of S1. I use that. I get in, and I'm sitting down, I think, minus 13 after this trade, because this one I thought the market was done going up, and now we're heading down. But though the market decides to keep moving, and part of the strategy itself is trying to keep yourself in a good trade situation whenever you can. Now, what else do I use? What else is I use the 5 and the 15-minute charts. What happened? You'll see this little line right here is your 200 bar. Here's your 200 bar. It relates to the 15-minute chart here. Here's your 2-minute. Here's your Here's your. This is correlates to here. Here's your 5-minute chart at the same period of time. It punches through the 200 bar, and it gets very close to the pivot point. So what I call pivot point magnetism was applying, and it pushes off of it, and then it comes on down. This is the trade that I caught, by the way. I caught from here, and I exited right in this area right here. I could have waited and come out a little bit later, but that would have required me to have the second part of that trade on. The first part of the trade exited right at this mark, and then this is that was the way it was. And if I would have had another trade itself on, then the second part, and I'll show you where the second part, I would have exited that as well. So here is one of my all-time favorite signals coming in. Here's your GAN and the up going in, right? So you're trying to find where the market is going to top out, right? So here's the market coming through here, and it's trying to get up there. So if I release this here and show you, this is how close we got. That shouldn't be there. This is how close we got to pivot point right there. So we got, And this is where it gets kind of dicey sometimes, right? It got to 50.92, it went up here, and it worked as a triple top. So the other side of this is if it would have continued and moved itself back up, then this would have been the fourth time through coming the other direction. Just think of that in a sense. So one of the strategies itself, the CLPIT strategy, is an all-encompassing trade strategy that I use on a weekly basis, but I'm still using all the technicals that I have in the past. So was the trade itself a winner? Yes, it definitely was a winner. If the opening trade did not win, did not do anything, did not pass go, the second time it showed some profit, and you could have taken some out there. Then this trade right through here ends up being the big winner. This is the one that ends up going down 4p on the move. So here's your entry point as you're tightening up your stop. I mean, as you're getting your target area, right? So I'm looking for the trade to be, where do I find value? Well, I found value at 81, and then I found value at 83. 83 is where I went short in the market, and you could see that finally tops out. Why does it top out? Well, Gann was a better person to understand this, and this is the way that I've been able to interpret the Gann signal. You know, how many times does it take to get to the center of that Tootsie Roll Pop? Well, in that commercial it's always 3, but in Gann it takes 4. So how do you determine it? Here's your 1, here's your 2, here's your 3. This could have been the 4th, but this is all accumulation of 4 coming down. It doesn't go back over, or you can look how many times did we go up from coming back down, right? 1, 2, 3, here's your 4th time, and the 4th time coming down and through. Why was I on the short side? Simple reason is I kept seeing volume bars that are on the blue side. This right here ends up being extreme volume or high volume bar, or whatever you want to call this volume, highest volume bar in the trading session, 3808. This to me was telling me that, hey, there's more shorts in the market than longs. We just need to find a value place to be able to get into the trade. This is where I found value right here at the 83 mark, and as you can see, it still works. And it all, you know, this is just a trading strategy on the inventory that will continue to work as long as there's a crude oil market, as long as there's an inventory report, and as long as there is a surprise in the inventory. It's the most manipulated report ever that's ever put out. So that's why, and that's why it's such a great trade to be able to put on a weekly basis. Was there a point where the market looked like it could turn around? Well, you can probably see all the red bars right here, right? Here's where I'm exiting the trades. When I saw all this start, I saw this one, this one, this one, this one all come in, and I'm thinking this short is done. You can put a fork in it. So at this point, it ends up going down to 50.15, and that's as far as it goes. So I mean, how much did I mess out on? About $150 from the low. I messed out about 13 ticks really when it ends up being all said and done and the smoke cleared. I messed out on about 13 ticks of profit on the trade when I exited, because I saw all these high volume red bars come in, and what I told myself as the volume tick study that I firmly believe in, hey, the buyers are coming back in the market, or it's short covering, or it's long covering of the market. They're covering, the shorts are covering right here on this rally that moved on down. So think of it, you know, always got to think, what are they doing? What are the traders in the node doing? And then you can see what happened right there, right? And then you see the blue bar volumes coming in. How long can you trade the strategy? Well, on a Thursday, you know, could I have caught this move up? Where would I have found value to be back on the long side? It would have been in this area right through here. More importantly, it would have been in this area up here after we cross over this 200 bar. So this, how much value was in the trade itself? Maybe on the long. Well, maybe down in here at the 1154, or up here and add to the trade above the 200 bar going in. And then you see this right here. Now, I would tell you that this would have been a good exit point for me all with everything that I had on the trading session. So in the end, what did I end up doing on the trading session on my first day back in the combine? I got 22 ticks, and I had actually had 3 different trades on. Two of them, no, I had 4 trades. I had 4 trades. I had one that was with 2 contracts, another that was with 2 contracts, and then I had 2 at 1. So I think 1, 2, 3, yeah, 4. So I had 4 separate trading decisions that I put in, and I think I lost 4 or 6 of the scenario, but I still end up pulling out 22 ticks. So it's a strategy that continues to work for me, and even after taking 6 months off of trading and using this market, the CLPIT strategy is by far my best strategy that I have. So I just want to leave you with that today. Um, the market was conducive to trading. The market was also allowing for a good opportunity to take advantage of how far a market can move. What I thought, and I'll put this out here, I mean, technically, like physicality, right? The technical side of me said that how far can the market fall when we were up here? And what I believed is that we could come down to this area right in here. And that was my plan. My plan was that we could stair step our way down all the way down to here and below. And ideally, I was looking for the market to run the $50 a barrel mark. But when I saw all those red bars kick in on the tick chart, then I knew that, hey, the gig's up, time to get out, time to call it a day as far as that. You see all these X's on the charts right now. That's telling you where I tried to get in, where I lost, but the big win comes in right here. So this is the win. I get in at 83 and I exit at 32. So that just lets you see that you can be losing your trading session and one trade can turn it around. And this, more times than not, when it works on the first trade, that's awesome. I wish they all would work that way. But more times than not, you've got to work your way into what you believe is the proper way of approaching the market. And you've got to look at the technicals. You can't just jump every trade that you see. If you jump every trade you see, you're going to be in the poorhouse quickly. I know because I've done that in my past. So you got to be patient, and it's tough to be patient as a day trader when you're seeing a good signal and you think, well, how far can the market go up? Well, what I told myself is that we were coming. You can see that I put the Fibonacci retracement on the trade itself. So I looked at this level against our lows down here. I'm like, well, how far can the market go? Well, I thought, well, at 50%. So your 50% retracement, and it fails here before it gets up to 2/3. So here is your movement. And where would it be really difficult? If it got above this 5102 and up in this area, then the longs probably would have taken over. So it is what it is. I mean, the technicals still work. You just have to be patient with your trade itself. All right. So I guess I'll edit out some of this stuff in the future and put together what I believe is the way to handle it. So I ended up being on the account on my first day back in the combine here after the reset, 31.97.92. So that's where I stand as of today, being October 12th, 2017. I'll see you on the next video I put together. Bye for now.